All right, today marks the 30th day that I've been in insurance. And what better place to start the video off than where it all began? Because right behind me, Bay Coast Insurance, where my journey began 30 days ago today. So what have I learned in the last 30 days? What do I look at differently in insurance now that I'm on this side of the insurance? You know, before I was on the consumer end, now I'm on the producer end. So what have I learned in the last 30 days? All right, one of the first things that I learned was about coverages. And I kind of touched base on this with my, my big shifts video that just came out. And I know that was a very long video, but in that I did mention, that before as a consumer, I always went with the cheapest. I was just like, I just need insurance, right? So the example I used there, I'll use it real quick again. And that's car insurance. I always thought you get into an accident, as long as you have car insurance, you're all set, you're covered. But that's simply just not the case, because things that you could hit can cause a lot more damage with liability than you would think. You would think, hey, I got $50,000, I should be good, right? Not the case, right? There's cars out there worth more than $50,000. You hit a telephone pole, that's worth a lot more than $50,000. If you crash into a business and that business might lose power or whatever scenario happens, I mean, there's a lot of chain reactions that could happen by your accident. And you could be a really good driver, you just one split second and something happens and it's your fault, and now you're liable for a lot of stuff. So that was the first thing that I noticed, is that coverage makes a huge difference. So that's what I started diving into. But that's not really what this video is going to be about. The main thing that I learned, I would say, if I had to put a bow on it for what I've learned in the first 30 days, and that is looking at insurance company through like their eyes, right? So I was always on the consumer end, but now that I'm on the producer end, I'm starting to see and understand how insurance companies work and how they operate, right? So one of the big things, if you just take yourself out of it, you look at it neutral, is that it is a business, right? And I know sometimes that just sounds like a cold word or uncaring word, but at the end of the day, that's how a lot of businesses operate. They have to look at their expenses and their income. So with insurance, it's a completely different world, because their expenses are not anything that's like guaranteed, right? Because, all of a sudden, your house could burn down or something crazy could happen with a lawsuit, and now their expenses go way up because of that. So that they could be, they could go up dramatically just with one incident, or just a rash of things happening in an area, and just a lot of claims go through. So, they take on a lot of risk. And, that's the biggest thing with insurance, is the transfer of risk. That's pretty much what it is. You're taking the risk that you have of things that could go wrong and things you might have to pay for, and you're transferring that over to the insurance company, and they're going to worry about paying that stuff. So that's the biggest thing right there. But when insurance companies look at it, they're trying to mitigate those risks, right? Because, it's a business at the end of the day. They have to look at, they can't allow things that cause a lot of losses to happen, because they can lose money very, very quickly. They can lose it in a hurry, like that, if certain things happen, way more than what you paid for your premium. So they have to be very careful on what they accept for different insurances. So they're constantly looking at the numbers and the data. So if, for instance, they have it on a data sheet that 23-year-old drivers, X amount of claims come in and it costs X amount of expenses, they might have to start looking at, okay, well, maybe we shouldn't have as many 23-year-old drivers. But that's just how they look at it. They look at it as, pretty much by data and categories. So that's how they group different things and decide, what they should cover and write their guidelines for their underwriters. It's all based on data. So if data goes up and there's a lot of losses, well, now they got to mitigate that so they can't take on those risks. So, all of a sudden, if like homes are within 2 miles of the coast or a mile of the coast, have a lot more claims, then they have to take on less of those homes. So what they call, and it's a common word that I'm learning, and it's almost becoming regular vocabulary now, is they have an appetite, right? So they're looking for the best risks, right? So just think of them as almost like going to the casino, right? Just like you would go to the casino, like they're just making bets. But they have to make smart bets. If they don't make smart bets, they're not going to be in business long. So that's a key element to how they think, right? So it's all a gamble on their part, right? They're taking a bet on you that you're not going to have claims, that's going to increase their expenses a whole lot. They're just going around taking good bets, and they're deciding what's a good bet, what's not a good bet. And the only way they know is just based on the data that comes back. So pay out a lot of losses. Okay, we took bad bets. We're not going to bet on those situations anymore. And the only way for them to hone in on it is by just categorizing everything. Pretty much everything you can think of, every scenario, age of a driver or this record or whatever it is for an auto. And then with home, the age of the roof, different things, how close you are to the road. And, do you have a pool? Do you have a trampoline? Do you have a dog? Is it a pit bull? What kind of dog is it? There's just all these little factors that go into it that make their decisions. So, years and years, they call it the law of large numbers. There's all this data out there, and, they just got to make sure that that they're taking on smart risks for their company, so their company can not go out of business, and that's one thing, especially with Dream Chaser Nation and different things like that, with businesses and different things, is sometimes people hear the word business and they just think profit, and they just think some guy upstairs in a suit is just getting rich off my profit, which, some people, are going to make some money out of it, but that's the idea of a business. But also businesses have a lot of expenses, and that's a lot of things that, even I wasn't really aware of until I got into, the business world, especially way back in the day with Walmart and management, looking at profit and loss statements and just seeing, it's just the amount of bills just to open a Walmart store with lights, electricity, employees, maintenance, buying all the merchandise, having it shipped there. Before a customer even walks in the door, it's a lot of expenses. Just monthly bills there to turn the lights on and run all those coolers and freezers was just, it's crazy. So that's where I kind of also understand, because I have some of that background, is that it's not all about, just making somebody rich. Profit sometimes sounds like a bad word, but sometimes a lot of that profit just goes back into the company to try to grow it and make it better. So when insurance companies have these different appetites, they call them, every company has its own little guidelines. So it's like putting a puzzle together, trying to find out the right coverage, because everybody's situation is different. Everybody has a different vehicle, a different age, a different housing location, the different housing conditions. So it's just, everybody's different. Every company has their own little guidelines, their own little structure, all based on loss ratios. And, even being here 30 days, looking at the claim report, there are claims that come in consistently. Before was I'd never filed a claim, but there are a lot of people that do file claims. And sometimes, obviously, you have to file a claim because that's why I had the insurance, right? So you can file a claim. I totally get that. One day, I'm sure I will have to file a claim. But when you put the numbers together, there are claims that are filed, consistently. So each company is running their own separate numbers. There's a law of large numbers, but each company is looking at their individual situation. Hey, we made these bets and, they didn't come through, so now we got to change things. And sometimes, they pay out a lot, and then, the next year they might have to get tighter. So they might have to get stricter. Maybe they'll take on less risk, and so, they got to bring it back. So it's that ebb and flow. They might say, okay, we need to get some new customers. We're going to have lower rates. And then when they get new customers and they get more claims, and it's just going back and forth. So it's that constant battle. So what's good about, being an insurance producer is, I can go in and look at the different carriers, and each one's at a different stage. So just because one, was great 3 months ago, they might have changed. They might have updated. Now, I've already seen updates just in the 30 days that I've been here. So it's always good to, take a review when you can. But then on the flip side, sometimes, different carriers, for longevity and different things, you'll get some discounts with them too. So, it's that ebb and flow with that also. All right, so there is a lot that I've learned in the last 30 days. I just made a super long video, so this one's not going to be as long, but just starting to see that mindset of looking at it through like a company's eyes, with expenses versus potential of high loss, not just, hey, I got these monthly bills and these expenses. It's, hey, I got these, income coming in, but the expenses could go off the charts, right? And you always have to have enough money. So that's key too. You know, you got to be able to pay the claims. You know, so like Massachusetts has admitted insurance carriers, and with them, you know, they're regulated by the state. So the state has a regulation, the division of insurance, you know, with the state. So that's one cool thing too with insurance is like, you know, sometimes, and I used to be this way as a consumer, you might be worried, oh, you know, what if they don't pay me and this and that? I mean, they have to pay you if it's a legit claim. So if they're not paying you, I mean, you can go and contact the state because that's what they're there. They're there to protect the consumers. So the admitted, you know, Massachusetts carriers, you know, they have to go through a process so that they could, you know, be approved to conduct insurance business activity in Massachusetts. You might see, you know, companies, they might get really strict and say, we're not taking anyone with this. So you might have a certain situation, a certain type of dog or whatever it is, or just where you're at the coast, and you're going to have a tough finding insurance. All right, so I don't want to make this video super long. Like I said, I just made a super long one, but I just wanted to touch base. 30th day anniversary. I'm excited. Just getting into insurance. Been learning a lot. Taking the exams before I started. Now 30 days here, training, experience, looking at all the carriers, going on their websites, doing trainings with each carrier. It's exciting. So, you know, I'm looking forward to bringing you more videos. Going to look into homeowners, auto, life, all kinds of stuff. So there's boat insurance. I mean, I could go on and on and on, but that's not for this video. So I just wanted to give you the key takeaway that I had for the first 30 days of being in insurance. Have a great day. Take care.